All right, let's dive into Perion's Q2 earnings. Look, after a really tough year, we're talking guidance cuts, losing that big search contract, everyone's been asking the same thing. Is their big strategy shift, their pivot, actually paying off? Well, let's get into it. And right off the bat, the market seems to think so. I mean, the stock popped almost 7% the day these numbers came out. That's a pretty strong signal, right? So what exactly did investors see that got them so excited? Let's break down the numbers. Okay, here's the headline. It was a clean beat. A really clean beat, actually. On the bottom line, their non-GAAP EPS hit 26 cents. The street was only looking for 17 cents. So they absolutely crushed that by, over 50%? Revenue also came in a little ahead of schedule at $103 million. Now, those are solid numbers for sure, but honestly, the headline beat isn't even the most interesting part of this story. The real action is what's happening underneath all that.
Right, so to really get what's going on with Perion, you gotta look at where that money's coming from. They're in the middle of this huge transformation, and the revenue mix? Well, that's where you see it all playing out.
And here's a look at that pie. You can see exactly how they're reslicing it. Search, the part of the business that caused all the headaches, that's now down to just 22% of the total revenue. And in its place, you've got the core ad solutions, things like web, digital out-of-home, and CTV, making up the lion's share of the business. And let me tell you, this is no accident. This is strategy in action.
So this really is a tale of two businesses inside one company. On one hand, you have the ad solutions business and is back to growth, people, up over 8% year over year. And that growth is doing exactly what it was supposed to do. It's more than making up for the 35% drop in that legacy search business. We all knew that decline was coming after the Microsoft Bing deal changed. The big takeaway here? The plan is actually working. The new growth engines are officially overpowering the old drag.
So where's all this growth coming from exactly? Let's get into the specifics. Digital out-of-home, or DOH, was an absolute monster, soaring 35%. Then you have retail media, another really hot area, up a super healthy 27%. And even their biggest piece, web, put up a solid 5% growth. This is the kind of momentum the bulls were waiting for. So how did they do it? What's the secret sauce? Well, it all boils down to one thing. Management's playbook, which they call Perion One. And this isn't just about patching holes to get through a storm. No, this is about building a whole new ship from the keel up. And this quote from the CEO, Tal Jacobson, just nails it. He says they're turning an awareness medium into a measurable performance engine. So what does that really mean? It means they're not just selling ad space anymore. They're selling results. You can actually measure it, especially in a hot space like connected TV. The whole idea is to give a CMO a tool that proves they're getting a real return on their money, not just, counting eyeballs. And look, this didn't just happen overnight. It was a very deliberate build-out, piece by piece. First, they bought Hivestack back in December 23 to jump into the global DOH market. Then, this year, they snapped up Greenbids to add some serious AI smarts. And finally, they put it all together, all these different technologies, under one roof called Perion One. The results? One single, powerful platform for marketers. And is it working? Well, we're already seeing some green shoots. Management said on the earnings call that the AI tech they got from Greenbids, they're calling it Perion Algo now, has already pulled in over $1 million in new deals. And get this, that's in just the first 3 months. That's a fantastic sign of early traction, and it shows they're great at cross-selling this new tech to existing customers. So the star of the show in this whole new strategy is something they call Performance CTV. Now, think about this for a second. Advertising on streaming services or connected TV has always been kind of like an old school TV commercial, right? It's about getting your name out there, building brand awareness. Well, Perion is basically trying to change the entire game. They're plugging in performance metrics, so an advertiser can track everything, from clicks to a website all the way to an actual sale. It's a game changer. And they're going after a massive market here. We're talking over $36 billion. Okay, so wrapping up what we've seen, a really solid quarter and a strategy that looks like it's really starting to catch on. But you know us, we're always looking ahead. What does this mean for the next quarter? What's our prediction for the next earnings call? All right, time to put it all together. We've looked at the numbers, we've looked at the strategy. So what's the verdict? What's our rating here? Okay, here's the official Talk Tickers thesis for the next call. First, we expect that ad solutions momentum to keep rolling. And search, we think that revenue is going to bottom out and stabilize right around where it is now, so it won't be such a drag anymore. Second, as the market starts to believe that this pivot is the real deal, we see real potential for the stock's valuation to go up, what we call multiple expansion. Now, the key catalyst, the thing you absolutely have to watch, is the adoption of that new Performance CTV solution. Any announcements about early wins there will be huge. So putting it all together, our analyst rating is outperform. And just to be perfectly clear, this has been our analysis of Perion's quarter and their strategy. It is not financial advice.